Hello everyone, I'm Scott Forrest, Head of Treasury, Debt Capital Markets and Capital Strategy at NatWest Group, where I'm responsible for the funding and financing of the medium to long-term plans for the group. At NatWest, we have been active in supporting the sustainability agenda in our communities for the last 25 years, whether that is through the Money Sense financial education programme, or more recently, the establishment of 12 accelerator entrepreneurial hubs in regional centres across the UK. Under the leadership of our new Chief Executive Officer, Alison Rose, our journey began to accelerate in Q4 of last year with a renewed focus on being a more purpose-led bank, responding to the needs of all of our stakeholders with a focus on enterprise, learning and climate. I've taken a keen personal interest in the developments within the green, social and sustainable market over the last few years and seen it grow from a nascent platform into a more rigorous and credible product set, which is widely understood and increasingly in demand by a growing number of international institutional investors. We've seen significant growth in the green, social and sustainable product set across corporate, financial and SSA issuers. This year, we've seen new developments such as COVID-19 response bonds, predominantly led by SSAs, which are helping to deliver a range of benefits to society. I'm sure that we'll see more developments in this space over the next 12 to 18 months. If we take a brief look at the issuance volumes in the Euro market over the last 4 years, total issuance across corporates, financials and SSAs rose from 90 billion euros in 2017 to just over 220 billion euros in the first 9 months of this year. This year, we have already surpassed last year's total by nearly 40 billion euros, with issuance volumes 2.5 times that of 2017. And the portion of social bonds issued has jumped from an average of 7% in previous years to around 25% this year. The International Capital Markets Association, or ICMA, is the authoritative body guiding the development of the green, social and sustainable bond market and is responsible for the green bond principles, the social bond principles and the sustainability bond guidelines. This suite of documents provide order and uniformity to the market, and although adherence is voluntary, the principles have overwhelmingly become market standard. The principles typically include 4 key sections. The first of these is use of proceeds, which is how the proceeds will be used to deliver the benefits to the environment or society. ICMA sets out the type of projects or activities which are eligible. In green, examples include renewable energy technologies, energy efficient properties, water management, as well as sustainable agriculture. Whereas for social, issuers can allocate to activities such as improving access to essential services in education, healthcare, housing, and employment generation. We need to have a process for evaluating each project for its criteria for selection, which is then used to select particular lending projects. This might include a look-back period for assets, particular exclusions, or the use of additional data to filter or rank particular assets. The third section is the management of proceeds, which outlines how an appropriate allocation will be maintained through the life of the bond, which usually involves the use of a dedicated working group, typically drawn from across the industry, and market-leading experts. Finally, there is a reporting for both the allocation of the proceeds and, more importantly, the expected or actual impacts. Impact reporting is key. It is how investors understand the resulting benefits of their investment. As with the use of proceeds, ICMA sets out guidelines for metrics that issuers should aim to report on. For green, this is largely straightforward and the impact can usually be quantified in terms of energy or carbon savings. Quantifying social impact usually requires a bit more thought but typically show an improvement in a particular service. For example, a number of patients reached, student places made available, or new places to live. Investors can therefore fully understand what the impact of their investment has been and what benefit that has generated. At NatWest, we've had 2 successful issuances under our Green, Social and Sustainable Bond framework so far. The first of these was in November 2019, when we were the first UK bank to issue a social bond under ICMA's principles. Under our social bond, we used the 750 million euros and allocated these to social and medium-sized enterprises in the most deprived parts of the UK. To select eligible loans, we developed a bespoke methodology based on Office of National Statistics data, which allowed us to sort our SME loan book, which comprised then of nearly 170,000 different loans, into geographical areas and rank them from the most deprived to the least. We published the interim impact report for this back in July, which reported on the estimated number of jobs created, in this instance 6,900. And in doing so, we used a standard set of economic models to produce the outputs. We've issued a green bond earlier this year, first from a UK bank into the US markets, with the $600 million proceeds allocated to renewable energy projects, including onshore, offshore wind, solar and hydropower projects. We plan to report on the impacts of these early next year, which will include estimations on savings on greenhouse gas and carbon dioxide emissions. These will hopefully be the first of many to come as we focus our efforts on becoming a more purpose-led bank, supporting our communities and helping them grow and thrive. All of the information on our green, social and sustainable bonds can be found on our website, www.natwest.com/fixed income investors. Finally, just to cover off, the market has taken great strides over the last 12 months, and we ourselves are looking at exciting opportunities to expand our existing framework. We hope to include new use of proceeds categories, which will help facilitate future bond issuance going forward. We think that this, together with issuing more bonds, will help support our renewed purpose of being a purpose-led bank.